Good morning. My name's Ryan Littlestone from Forex Flow. Today I'm going to talk about euro dollar, just as we come to the ECB meeting this week. What we found with this pair is that we've been in a very tight range for several months between sort of 112 and 115, where we recently had a breakout above 115, which was quite explosive, took us all the way up to sort of 115.75. That has been a break that really has failed, and we're back down under 115 and even below 114, and that's put us back in this 112, 115 box. Now, initially, this 115 level had been building very steeply. We'd had tests going all the way back to October and prior to that as well. So the play for that one and what I did and what our colleagues did in our trading room was to stick buy stops just above 115 to catch this break that happened, because it was looking very explosive at the time. We all jumped in just as it broke 115, rode it up to towards the highs, taking profit on the way, and again testing to see if that became resistance at 115 or whether it failed, and the consequences are that it failed thereafter. So that's put us back below 115. That solidified the level again as resistance, and now we're watching that area. We've seen it test up to 114.90. It hasn't got anywhere close to 115 or even looked like breaking it again. So that's marked the top again at 115. Again, that's become the range top. We've had the move down. We've gone back down through 114. 114 is now offering resistance around the 114.10, 20 level. That's the main area to look for resistance now. But what we need to see is, are we going to get a push lower down towards this 113 area? Now, as I mentioned, we've got the ECB meeting coming up this week. Obviously, no expected action from the ECB. Markets are pretty much ruling out a hike till perhaps later in the year, if at all. So what we're going to hear from Mario Draghi is how he's going to speak about the economic recovery that's been going on, whether it's faltering, whether it's stalling as global growth is across the board, and just to see whether there's going to be any signs of bringing out any of these extra tools that they've got in their toolbox for monetary policy to support the potentially weakening economy. So if we do get something on the dovish side, then we're potentially going to be looking at a test of 113, perhaps even lower. That might bring us to the lower end of this well-trodden range, down towards the 112 area. 112.60, 70 is a big level down there as well. We saw a big double bottom there through November and December. That's a key level to watch, as well as the early November low around 112.15. So for this, trading is pretty simple. You've got some levels to look at, a big range, 112, 115, trade them in between it. Look for the support levels that are stronger amongst them. You can go with longs against those support levels, keep it fairly tight. There's no need to risk 200-300 pips on it. If the level breaks, the level's dead. Move on to the next one. Conversely, on the upside, we can reinforce shorts against the 114 area and more strongly against the 115 area. So that's one way to look at euro dollar into the ECB meeting. What I want to quickly touch on again is following the videos I did the previous weeks is dollar yen. We were looking at whether the 108 level was going to keep the higher range intact, or whether we were going to see move on to a lower plane. As you've obviously seen from your own charts, we're up above 109 at the moment, so the 108 level again has solidified as support. That's our main area, and what it does, it pushes us back into this 108 up to 114.50 range. Again, another big wide range to look at that's lasted for months and months. We'll see if we get a move up towards those highs, but in the meantime, we're just looking at minor levels on the way. The next big one in the way is sort of 110, 110.20. Again, we move on to 110.80 after that. So it's pretty much playing the big figures. So the 110 area is one I'm going to be looking at for a potential short, just to scalp against the big figure there at 110, maybe with a stop just above that next level at 110.20, just to see if this range is going to develop further, or whether we're going to see it fall back towards the 108 level. As I say, the 108 level is still key in all this, so keep an eye on that. But at the moment, we're heading towards middle ground in this bigger range. That's a look at a couple of those pairs. Good luck this week, and all the success for your trading.